The following content is for informational purposes only. The views and opinions expressed by the hosts and guests are solely their own and do not necessarily reflect the views of Alia, its affiliates, or any organizations represented by the participants. Nothing discussed should be construed as financial, legal, or investment advice.
Welcome to Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. I'm your host, Stefano, Director of Institutional Services at Alea, and with me I have John Cho, CEO at Ratio and Chief Stablecoin Officer at Kaia Foundation. Ratio is an on-chain foreign exchange orchestration layer for Asia, providing a unified infrastructure that helps financial institutions, payment platforms, and wallets move value across borders through stablecoins. John, welcome on the show. So great to have you with us.
Yeah, no, good seeing you again, Stefano. Thanks for having me.
Yeah, definitely. We met not too long ago, a few weeks back at Money 2020. You guys were hosting a lovely event at the Padel Court, very well curated, very experiential, um, great people, and yeah, you had a lovely talk about stablecoins in Asia, which I found very engaging, insightful. And so I went up to you, we had a little chat, and yeah, decided to have you on the show. But before we get into all that, what was your general impression from Money 2020 in Bangkok?
Yeah, well, I mean, first of all, thank you for participating in our event. It was a really great event. I think the way that we handle and approach events is definitely different from your typical crypto slash fintech startup. We're definitely much more focused on quote unquote constructive networking. So we are very selective in who we invite to the events, but also at the same time, we make sure these events are fun as well. So I think the whole paddle or padel, however you want to pronounce it, kind of like oriented events do wonders when it comes to just like being able to network. But yeah, I mean, like Money 2020, it was my first Money 2020, and I think the biggest contrast for me when compared to your typical crypto event was that it was definitely a lot more constructive in the sense that everyone that was there at Money 2020 was there with a very specific agenda. They were there with very specific deal flows that they were looking for. So every conversation was less about ice breaking and less about just like, establishing contact, but more about like, defining next steps, just, I think conversations in general were much more concrete. So my team and I think we decided like moving forward, we're definitely going to be focusing a lot more of our energies on these kind of like fintech conferences.
Yeah, for sure. I was at last year's edition as well, and that was my first time, I think, going to a non-crypto conference, and it's so different. Like the level of production is on another level as well for the main event as well. But you're right. Like everyone there is a professional first, and they're there with a certain mandate. And that can be a little bit different from certain crypto conferences where there's just a lot of enthusiasts as well, which, one isn't necessarily better than the other, but it does offer a very different dynamic. And as you say, like the conversations progress a lot faster because you skip the whole part on like, what are you doing? What are we doing? Yada, yada. And you get straight to the good part.
Yeah. I think, especially coming from, the crypto sector and, having like most of my like, conference experiences have kind of been like, based in crypto events.
Yeah.
But coming from that background, I would definitely recommend to any other like, fintech adjacent crypto startups or teams to attend fintech, events like this, because like you said, it's just a lot more productive. Like the way that the Money 2020 event was organized, it's very easy to schedule meetings. And these meetings aren't just like, hi, how are you doing? Like to your point, it's not like meeting with enthusiasts or like community, quote unquote, community members. Not that there's anything wrong with that. But yeah, everyone has like a very specific kind of commercial agenda, which is a breath of fresh air.
Absolutely. Um, Another thing that caught my interest, moving on a little bit, I'm curious about what those conversations centered on, and I want to unpack a little bit about um, what you told us during your talk as well. But before we do that, I noticed we have a background in common, which is that we both have a formation in psychology.
Oh,
Um,
really?
I noticed that. So that's very cool. And after that, I saw you were in a lot of growth roles. So I'm curious about that experience, um, your background, your roles, how that shaped you. Um, and I can specifically imagine that in a space where there's so much problems looking for a solution, you actually come at it from a more consumer centric view, which yeah, I'm curious if you share that sentiment or not.
Yeah, no, absolutely. So first of all, it's great to meet another psychology graduate. So yeah, I mean, I graduated, in psychology, and my school, they allowed you to kind of specialize in specific, categories. So I ended up kind of specializing in neuropsychology, which is super interesting, super difficult, but yeah, super interesting. And I think as an extension of that, I've just always just been very interested in like, consumer psychology, marketing, growth, and so on. So my past roles have very much like to your point, have been oriented around that. So before joining, crypto slash blockchain slash fintech, I was kind of like your typical kind of like, corporate kind of like, uh, employee, working for like, conglomerates largely in South Korea, in either strategic planning or kind of like, data oriented or growth roles. And, that experience, I think, has helped kind of like formulate my approach to like execution. Because in the blockchain space, a lot of the time, the products and solutions that, kind of come out are often, solutions for problems that don't necessarily even exist yet, or
Yeah.
problems that aren't necessarily critical or like critical bottlenecks. So I've always, had the approach uh, of like, if we're to leverage blockchain, and our goal as an industry is to, onboard mainstream, touch points, be it consumers, be it enterprises, institutions. And in order to do that effectively, you really need to be able to like, scratch an itch that is very tangible and concrete. So we've always kind of like, at a greater kind of Kaia ecosystem perspective, we've always worked with teams, or we've, developed products and services that will help alleviate real world bottlenecks. And again, because that's the best way to kind of like lock in potential partners and users. So I think that's been kind of like, a big difference in my approach. So generally, again, just to kind of like, summarize, in the blockchain and crypto space, a lot of the products and services are about the technology and how forward thinking it is. But for me and our organization as a whole, we always kind of like take a step back and, think about whether or not these kind of like, uh, tech stacks out there can actually help alleviate real world problems. And, that may not be the sexiest proposition, but you know, um, it's the most tangible and most kind of like, acceptable kind of like, strategy, I think.
Absolutely. And I think Kaya is always like famously known for being integrated with Line Messenger, the Messenger app, which is I didn't know it before coming to Asia, but once you're in Asia, like you can't get around it. It's ubiquitous. So that's pretty much like a testament to that consumer driven approach that Kaya has, right? How Tell us about your time at Kaya, how you got involved, and yeah, you've been focusing on stablecoins there specifically, and I imagine that's what naturally led to starting off Ratio as well. But maybe tell us a little bit about your experience there.
Yeah, no. So right before Kaya, I was working in the advertising industry, but not in the way that most people, you know, uh, know the advertising industry. So I was more oriented around like, data-driven insights, data-driven strategies, and data-driven execution. So I was very early to the kind of like, performance marketing sector. So right when like kind of like Facebook and Google ads were kind of like taken off, so it was my job to like establish pipelines, processes, and teams actually to kind of like be able to analyze all this data coming in from these social media platforms and to formulate actionable strategies around that. So having that background, I looked at the blockchain space and saw a lot of potential because, the tech, in the form of the decentralized ledger itself had a lot of potential to alleviate a lot of the pain points that we had when especially like trying to onboard and, acquire, users. So that was kind of like the mindset I came in. I joined Kaia back in 2019 as part of originally as part of the strategic planning team, and you know our mission ever since back then was to be able to basically leverage the relationships that we have in these massive distribution channels that we call Kakao and Line. So if your audience is not familiar, Kakao Talk is the dominant messenger in South Korea. It has basically 100% market share. So it's approximately around like 50 million users. Line is the dominant messenger in Japan, Thailand, Taiwan, Indonesia, and other parts of Southeast Asia. And, as we all understand and know now, these messenger services aren't just literally messenger applications. They're what we call super apps. So
Right.
they are a part of everyday life in Asia. And they dictate how a lot of consumers interact with different, like, consumer touch points like shopping, payments, communication, and so on. And we wanted to be able to leverage this to really, put a spotlight on blockchain technology and the potential to help facilitate more growth around these existing distribution channels. So the approach was not to really like, be in your face with like crypto and blockchain, but rather approach blockchain from an infrastructure perspective and an optimization perspective. So to be able to like optimize existing experiences using the benefits of blockchain and tokenization.
Got it. And now one of those problems you want to tackle is foreign exchange, right? So um, we're looking at the Asian market and speaking about it specifically. We're talking about stable coins. We're talking about foreign exchange. But I think when we're talking about ratio, I mean, but I think a lot of our listeners and a lot of audiences are used to thinking about stablecoins in the context of what that means within frameworks within the US, and if not the US, then the EU, right? And how the infrastructure works there. How does that compare to Asia, and what are some unique difficulties there?
Yeah. So to answer your question, uh, in a more, like a kind of like a fully fleshed out way, kind of take a step back. And if you just look at the region as a whole, there's been an interesting trend. And this is something that I always kind of like start my presentations with, because I think this data is, kind of like, under the radar for a lot of people.
Right.
So if you look at the money flow in Asia right now, what we're able to kind of like, identify is that over the past 5 or 6 years, there's been an exponential growth in inter-Asian financial collaboration. So what do I mean by that? Basically, there's been a lot of growth in inter-Asian cross-border transactions, settlement, commerce, trade, even things like tourism and so on. And it's very similar to the momentum that we saw back in the 90s. If you're around, I don't know how many of your audience members were still around back then, but back in the 90s we had this phenomenon called the Asian tigers.
Right.
And basically the region as a whole just saw this massive economic growth, largely fueled by inter-Asian collaboration. All the countries in the region were basically like boosting each other's economies, but that kind of like died down as we saw larger integration with the global economy, especially the European economy and the U.S. economy. But recently, geopolitics politics has definitely had an effect. But you see a lot of like people talking about like de-dollarization or decoupling with the dollar or
Mm,
decoupling U.S. economies. And I think you know it's not an over exaggeration. I think there is definitely an aspect of that, and you can see it in the data. For example, in the AI sector, there's a lot more trade and collaboration between Taiwan and South Korea, who are basically who these two countries basically own the kind of like the AI hardware value chain. So this is a great, I think it's a great return to tradition, if you will. But the problem is, as a region, it's super fragmented, especially from a regulatory standpoint. So, and also from an infrastructural standpoint as well. So, I think a lot of the lawmakers in the region are looking at stablecoin rails and blockchain infrastructure to help alleviate a lot of these pain points. In the US, US denominated stablecoins weren't necessarily created to kind of like address specific bottlenecks. I think US denominated stablecoins were created just as kind of like a part of the kind of like the new like blockchain wave. There are conveniences related to that, but in Asia, I think the attitude is different in the sense that they like regulators and lawmakers and stakeholders in Asia are looking to stablecoins as a way to alleviate real world bottlenecks, and that's kind of like where we identified our opportunity because in I'm just kind of I'll wind up my thoughts here, but if you look at transaction, if you look at the term transaction, be it again cross-border settlement, payment, or anything, at the end of the day, on the back end, there's always a form of FX execution that happens. Even if it's like remittance, you have to be able to swap from one currency to another. So FX execution is a core component of any kind of financial transaction in the world. But like I said, regulators and lawmakers are looking to leverage stablecoin rails to alleviate these kind of like bottlenecks, and that means we're going to get to a point where once all the legislation has been passed, enterprises and institutions will be comfortable holding stablecoins on the balance sheets as opposed to fiat. Now, when we get to that point, like I said, again, every kind of transaction has some form of FX execution. Now, if they're holding stablecoins on the balance sheets, they're going to have to require some form of stablecoin specific FX infrastructure, which,
mm.
to be honest, there are teams out there building, but not in a way that is optimized specifically for stablecoins. I think a lot of them are doing really great innovative things, but they tend to use existing technologies and improve on that. So we wanted to build something that technically does not exist yet, and I think that's what our ratio is.
Yeah, yeah, yeah. Okay, that's very clear. So, of course, a lot of economic activity going on in Asia, intra-Asia, as you said. But there are some friction points, some bottlenecks, which stablecoins can offer a nice solution to. And with that, a specific platform like Ratio, which we can get into now a bit further. Before we get into that, and also as you said, there are like other providers out there offering something similar, but why is that not optimal? We can explore that. But before we do that, I'm curious. Like, we already have USD denominated stablecoins. Um, why do these local currency stablecoins matter if these USD stablecoins already dominate the market and could be used to transact uh, between players?
Yeah, no, that's a really good question. So why not just stick with USD denominated stablecoins as kind of like the liquidity, infrastructure? Well, there are a lot of reasons. I think number one, at a high level, there's definitely a geopolitical reason why regulators and lawmakers in the region are pushing for local stablecoins. Because obviously, if you're a lawmaker and regulator in a country, you want to be able to maintain your sovereignty and maintain the competitiveness of your sovereign currency. So I think one kind of like, key, like, universal reason for all these countries pushing stablecoin legislation is because they want to be able to maintain their, currency currency and sovereignty versus the US dollar. Because I think they understand, you know, utilizing blockchain for transactions is inevitable. Because the efficiencies there are just too obvious to ignore. But that said, I don't think there's any government in the region that are okay with reliance on the US dollar. So that's kind of like there's that geopolitical aspect, just to be
Mhm.
able to maintain the competitiveness of local currencies. Number two, if you introduce local stablecoins into your flows, it's just cheaper at the end of the day because there is a premium right now attached to on and off ramping on into USD denominated stablecoins, and also the fact that USD denominated stablecoins kind of like dominate the liquidity. The OTC players and the centralized exchange players who kind of like uh, you know control the current landscape are free to also charge a premium as well. So by introducing local stablecoins and by having local on ramps, like for example, banks where they will not be charging a premium, it just makes everything cheaper. That's just kind of like the end of the day, high level takeaway.
Okay, that makes sense. Geopolitical reasons and just business reasons, right?
Yeah.
W- which drives everything at the end of the day. Um, okay, so let's get into it. Like ratio, like give us a simple explainer. How does it work? What does that process look like? If counterparties use your platform or something like ratio compared to like how it would work right now, right?
Yeah. So that's actually a good approach. Let's talk about like how a lot of the stablecoin rails work right now. So there are a few fintech, startups out there that leverages stablecoin rails for quote unquote faster and cheaper remittances. So normally, the flow would be like this: say you are a Indonesian migrant worker working in Taiwan. What you would do is it's very difficult for Indonesian migrant workers to obtain bank accounts. But there is some flexibility in Taiwan where those migrant workers can actually open crypto exchange accounts.
Hmm.
So they on ramp from Taiwanese dollar fiat to USDT, and
Yeah.
then that USDT is sent over to whoever they want to send money to, and then locally in Indonesia, that remittance service provider will most likely work with a local PSP, who will then help them off ramp from USDT into local fiat, and then from there they will work with either the PSP or a local banking partner to send that fiat to the designated receiver's account. Already, you have the initial on-ramping centralized exchange in Taiwan. You have a local PSP in Indonesia,
Mhm.
and also potentially like local banks. You already have three participants in the whole flow, each one of them charging fees. Also, again, there is a premium attached to on-chain USDT on-ramping. So you will not be able to on-ramp from Taiwanese dollar fiat to USDT stablecoins at expected kind of consumer exchange rates that you would see like on Wise or Revolut. There's always like a 10-20% premium. So it's inherently expensive right now. So just off the top of my head, if I want to send $300 or so, I am going to be charged like $6-7 on that, which is a lot of money for these migrant workers. Now, what
Yep.
Ratio does is basically we take out a lot of the middlemen by leveraging local stablecoins, also at the same time reducing fees. So if you introduce Ratio into that flow that I just suggested, what would happen is this. So the initial on-ramp will remain the same because, in order to on-ramp users, you need a license, you need to, have AML and, FATF compliant kind of like, KYC infrastructure and all of that stuff. So the on-ramp will happen as normal. So from Taiwanese dollar to USDT. But instead of off-ramping from USDT into Indonesian fiat through a PSP where they can charge anywhere between from 100 to 500 bips, what would happen is through Ratio, that USDT stablecoin would be converted into IDR stablecoin at mid-market rates. So mid-market rates, basically, these are the rates that you see on Google, on Bloomberg, and so on. So you're able to swap at mid-market rates, which is just doing really rough maths around like 30 bips, which is, I would say, like maybe even 1/3 or even 1/4 the kind of like typical price that PSPs would charge to off-ramp into fiat. So you
Yep.
swap into an IDRP stablecoin, and then we work with the issuers directly, and which to allow users to basically off-ramp from IDRP stablecoin into IDR fiat at 1-to-1 without fees. So when you kind of like think about what just happened, yes, you will still have that initial on-ramp premium and fee, but when you off-ramp, you're looking at an additional like 30 bips, like, 0.3% or 0.4%, as opposed to like an additional 2-3% that you would normally be charged when using a PSP to off-ramp from USDT into IDR. So that is just one example of how Ratio can save money for the end user by utilizing stable to stable swaps at mid-market FX rates. Now, because Ratio is B2B infrastructure, the the core protocol that we built, retail users won't be interacting directly with Ratio. It will be through third party like products and services. So our hope is that these clients will pass on these savings to our consumers, as opposed to just
Okay.
absorbing those savings as uh, to increase their bottom line. And I make it. I make it like a conscious effort to mention this in any kind of like interview or conversation, as so clients who are using Ratio uh, have to consider like passing those savings onto the consumers.
It's an interesting matter actually. So what would you assume that, look, if those margins aren't there, those service providers, the ones servicing the end user, they have to compete with each other as well, right? So once one has that margin now, he can drop down, the other ones kind of have to follow suit. So, and it kind of rebalances at a new, a new equilibrium that they're all kind of comfortable with. Is that something you foresee happening? Because that would be like the natural assumption, but maybe I'm off there.
Oh no, 100%, 100%. The great thing about, like, the best thing about blockchain technology is due to the decentralized nature, anyone can build using that infrastructure. And so what we've been seeing is like as kind of corny as it sounds, the democratization of, like, for example, financial instruments and services. So DeFi, as an example, has done a great job giving retail access to financial instruments that previously retail would not have had access to through traditional, financial institutions and infrastructure. So, for example, perps, I think is like a really, really concrete, tangible example of how blockchain technology and blockchain financial instruments are giving access to things that retail's never had access before. Like, uh, for example, like just longing oil or shorting oil, you would have had to have been an accredited investor to have exposure to that. But now users can access that on Hyperliquid whenever they want, 24/7. In
Yep.
that sense, with payment infrastructure and FX infrastructure, I think we're going to see a similar thing happen. We're democratizing basically access to infrastructure, to distribution channels, where we see a lot more very smart people come and build things that function much better than legacy products and services. So all these legacy enterprises and institutions, they've had a very comfortable run over the last like 50 or 60 or so years. But I think the time has come where they're seeing a lot more real competition from smaller teams. And it's going to force them to, take a haircut, to kind of like, maybe, be a little bit more modest with the bottom lines and really pass those savings down onto consumers.
Yeah, absolutely. This reminds me of Money 2020 again, where the floor of the conference makes up a very interesting mix of participants. You see parties like Chubb Insurances, and then you see something like Reap, a payment provider, and then you see Circle. And the point is, like, you see these legacy provide financial service providers, which you mentioned, alongside like this new budding emerging industry players from our industry, right, sitting alongside each other and looking to compete with each other. So I think that that speaks to your point that they're all moving in that direction and that competition is starting to take place. Um, where I want to take this is that some of those mentioned parties on that conference floor are some of your counterparties as well. Some PSPs, different partner types. You mentioned on ramps and off ramps. Maybe you can tell us a little bit about, let's say, like that mix or that ecosystem of partners that you have, and um, how you manage those relationships.
Yeah. So to answer that question effectively, you're gonna have to look at kind of like the existing traditional FX um, landscape. So FX is a very complicated web of thousands of different entities. And if you really like deep dive into it, it's crazy. I mean, globally, FX volumes are in the trillions every day. Trillions. That kind of like boggles the mind. And
Yeah.
you have thousands, if not tens of thousands of participants all contributing to this. So what we are attempting to do is to bring that on chain using stablecoins. Now, just because we're bringing that on chain, there are going to be aspects where we can automate things using smart contracts, but ultimately, it's going to be a very similar value chain and also very similar, like landscape. So, ratio, basically, for ratio to work, we need a multitude of different partners across different categories to help us out. So first and foremost, we are B2B infrastructure. So we have, our clients who will be integrating Ratio in their backends. And up until now, a lot of those clients have been clients that have user-facing products. For example, Line Messenger, or we are talking with a remittance product and service provider based in Taiwan. So, uh, enterprises and institutions with user-facing products, the clients. Now, on the operational side of things, there's also a massive kind of like variety of partners that we have. We have market makers funds, FX trading desks that provide liquidity for us. So Ratio is differentiated from other kind of like major infrastructure providers, like for example, say StableFX, which is Circle Solution, and Bridge, where they aggregate different third parties from different regions and offer that through their kind of like unified front end. For Ratio, we're very much focused on execution as opposed to aggregation. So it's all proprietary liquidity. All the FX execution is done within our proprietary tech stack, but that proprietary liquidity is sourced from third parties. So we have liquidity providers. And a third major kind of category of partners that we have are our rebalancing partners. So rebalancing is a concept that you see in traditional FX markets, where basically you have FX trading desks. If they want to swap a specific currency for another one, they do that. And then their counterparty, what they have to do is then they have to rebalance their inventory every time like a swap is made from like their inventory pool. So
Mm.
we do that as well. So we work with actually traditional off-chain FX desks as well as on-chain specific stablecoin issuers and also liquidity providers to help us rebalance our inventory in real time as well. So what we are doing at a high level is translating what happens in the traditional FX markets and moving that on-chain. And when people hear that, they may think, what's the difference? Like, are you really improving anything? At the end of the day, yes, because it's just cheaper. Um, the flows and the operational aspects may be similar and maybe a reflection of what happens in the traditional sector. But when it comes to optimization, efficiency, and just cost savings, there's no comparison.
I imagine it's faster as well, simply.
Oh yeah, of course. Sorry, I
Yeah,
left
right.
out saying your biggest benefit. Of course, it's faster.
Yeah, this is actually as an end user ourselves as well. This is something you run into from time to time when you're sending money from, I don't know, your Dutch bank account to your Thai bank account, or you have some bills to pay in Portugal, or you're sending money to a friend or family, whatever it may be, right? Like it still takes days sometimes in some cases. Sometimes you're lucky, like the banks have like a good mutual agreement, but it all depends.
Yeah,
um so yeah, definitely. Then another counterpart, so right, to like bring home your point, it's still like a very rich tapestry. It does mirror the traditional, let's say, the infrastructure or the architecture of how these ecosystems work, but it's just a lot faster and cheaper. One counterparty that I imagine you have to deal with is these individual regulators in all these specific jurisdictions, right? And that's something that I can imagine could yeah, that's something I imagine you guys have to be very, very aware of, and very keeping a finger on the pulse at all times, because I have to imagine that, like, if there's a bottleneck there, let's say, that has very immediate consequences to your your rollout.
yeah, no. So absolutely, you're right. The regulatory landscape is going to have, a direct impact on like our business. Now, at a high level, luckily, there's no signs that this kind of like the momentum around stablecoin legislation is slowing down. If anything, it's speeding up, which is great. Because again, I think we've kind of like gone past the point of no return. I think every country will have stablecoin legislation in place very, very soon. Now, we approach compliance and regulatory kind of like, uh, strategy from two perspectives. One, is Ratio as a business, like is what we're doing legal? So our entity is based in Hong Kong, so we have been talking to a lot of advisors, a lot of people familiar with the regulatory landscape in Hong Kong to kind of like tell us what kind of license we need in place. But at the end of the day, The way that we position ratio is because we're backend infrastructure and not consumer facing. The kind of like the pressure to have the right licenses in place is less for us than say like an entity like Line Messenger who are offering actual like products and services directly to the consumer. So we were strategic in that aspect where we can kind of like continue building our product and services, but we do have some flexibility when it comes to like requiring licenses or anything like that. So that's just one perspective. Another perspective is, in order for this to be very successful, in order for us to achieve our vision, we need stablecoins out in the wild. So we have basically people and networks in all of our core strategic regions. We're always following the regulatory kind of like landscape as closely as possible. We participate in discussions with regulators whenever possible as well. But again, my kind of like my thesis has not changed. I think come this time next year, a lot of countries would have passed the legislation, and we're going to see I think, a pretty significant liquidity injection on chain as we see these stablecoins like enter like utility.
Interesting. That sounds very exciting.
Yeah.
Um, you mentioned uh you gave an example of the 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 bar, let's say, that's set for to what extent um you have to be compliant as a B2B business compared to a B2C business. I imagine that was a specific learning maybe from your experience and time at Kaya, noticing like that bottleneck. Was that like a specific, let's say, an insight that informed your decision making for the strategy at Ratio? And what have been other specific events or developments in your time at Kaya that have shaped your your thinking and the strategy for Ratio?
Yeah. So, you know, Kyle was born as a layer one blockchain originally for Kakao. And then later on, you know, uh, my kind of like, memory's a little murky right now. Crypto does that to you. But as of 2 years ago, also the layer one blockchain for Line Messenger.
Right.
Now, because of this background that we've had, like we discussed earlier, a lot of our focus had been on consumer facing products and services.
Yeah.
We had this underlining kind of like internal kind of like strategy where um, we will focus a lot of our resources on either us directly building or helping others build blockchain products and services that can integrate with existing kind of like distribution channels like Line and Kakao, or just like just basically just helping a lot of people build like interesting, fun services for users. But the thing with user facing products and services is it takes a lot of money and time to acquire new users. A lot of money and time to maintain and and keep those users. So unless you're really well funded and flush with cash, it is very difficult to maintain sustainability when you're building user facing products and services. Because
Yes.
with consumers, especially consumers these days, a lot of them follow trends, and especially like consumer facing products also are directly impacted by markets. So it's very difficult. In all honesty, the ROI is very hard to kind of like achieve. So we, over the last, especially like last couple of years, I think technically we're in a bear market, so it's given us some time to reflect. And you go to that old kind of like adage, about like, the California gold rush. So in the 1800s, the California gold rush, the people who made the most money weren't necessarily the gold miners themselves, but the people who sold the jeans that the gold miners wore, or the
Hell,
people who sold the pick and shovels that the gold
true.
miners used. So we realized, not too late, thankfully, that it was the picks and shovels infrastructure that, you know, was really kind of like, where the opportunities, revenue growth, and sustainability was at. So that's why, right now at Kaia, a lot of the focus is on building out core foundational infrastructure that our ecosystem partners can take and use to, enhance their, existing experiences. So that's why we built Ratio. That's why we're building other, products like Superon, which is a yield infrastructure. But definitely, blockchain as an industry, though, I think has realized this. So there's been a shift in the conversation. Before, it was about user-facing products. Web3 gaming was massive. Tokens. But if you look at the money, where the money is flowing into these days in the industry, the conversation is very much focused on those kind of picks and shovels infrastructure opportunities.
Yeah, sometimes it's like we came full circle.
Yeah,
Like, the blockchain, what is it? Inherently, like it's a technology that can innovate financial infrastructure. And we went for the last few years in circles trying to like find all these new innovative applications for it. And at the end of the day, and I think this is also because a lot of participants in the space just grow older and become more mature. It's like one realization I clearly had is that, you know, I like to work in a profession where I feel I'm making a contribution to the world. And then you start questioning, okay, but what does all of this amount to? Right. Well, then you start drilling it down. And sometimes you have to be um, like very sober, but at the same time, very realistic. For example, thinking that if we just improve the financial infrastructure, maybe by, I don't know, 5%, that doesn't sound like, that doesn't sound world changing, but in the bottom line, it actually is. And it opens up a lot of new application services. Like you mentioned earlier, if you are able to drop the costs significantly, you open up certain markets for a lot of participants that simply didn't have that access before, right? And those are things people don't really think through, but that have a major impact from the work that we are doing right now as an industry as a whole, right? So I find that uh, very compelling. And as you said, it's working B2B is often a lot more sticky, right? The flows are a lot more sticky. So in closing, you took it back all the way to the 1800s. Instead of like looking backwards, I want to look forward a little bit as well. Say 5 years from now, this industry has made those contributions that we just discussed, and Ratio did its part. What does that look like?
yeah. Um, and you can quote me on this, but I think within 2 years, 3 years, every country again would have passed a form of stablecoin legislation where they legalize stablecoin payments. Enterprises and institutions are comfortable holding stablecoins. Now, when that happens, when you think about it, when that happens, and it will happen, sorry, not when, no, yeah, so when that happens, when you think about it, there's no need for on and off ramps anymore. So there's going to be a massive shift in terms of like, I don't want to use the term power dynamics, but I'll use the term power dynamics because the a lot of the on and off ramping services are provided by PSPs. Even centralized exchanges integrate PSP infrastructure for their on and off ramping. But if you're living in a world where people just can now hold and spend stablecoins as legal tender, there is no need for that. So once we reach that point, where I see Ratio is Ratio. I mean, some of the feedback that we received, when speaking with potential partners is that, I love the direction that you have. We agree with you, but it all seems a little early, and they're not wrong. But the reason why, we wanted to make that first mover advantage is to be able to position Ratio, especially in this region, as like kind of de facto stablecoin specific FX infrastructure. So again, 2 years later down the road, 5 years later down the road, when everyone is, holding stablecoins as opposed to fiat in the bank accounts, using stablecoins for cross-border transactions, on the back end, it will be Ratio executing all of that FX. Um, and Ratio has positioned itself successfully as the de facto stablecoin FX infrastructure. But I mean, a lot of founders talk like this, but I am supremely confident we will be able to achieve that, largely due to two things. Very proud of the tech that we were able to build, but also the relationships that we are able to establish at this point in time now with
Yeah.
these issuers, local Asian stablecoin issuers, because a lot of these issuers have been going under the radar because everyone's so focused on USD denominated stablecoins. That's where the liquidity is. The legislation has not passed yet, but these issues, these teams like IDRP are going to be one of the biggest kind of like, players, I think, in the region when it comes to, financial technologies over the next few years. So having these relationships in place now will definitely benefit us 5 years down the road. And it's, I think, like these relationships play a big part in positioning Ratio as kind of like the de facto FX infrastructure for stablecoins.
100%, especially in markets like these, which are very relationship driven. By which I mean both like institutional markets, but also Asia, uh, in general,
Yeah.
culture wise. You mentioned IDRP. What's to bring it in a little bit back from 5 years out to, let's say, 5 months out? Um, what's on the horizon right now? What's next? What are other what are the next stable coins, local currency stable coins in Asia that we expect to be integrated?
Yep. So Ratio will be going live within the first half of this year. So probably end of May, early June. And when we go live, we will have kind of two key integration. Number one, we will be integrated into the Line Messages neobank application called Unify. So Unify is Line's flagship stablecoin application. Right now, it offers stablecoin staking and yields, but in the future, they will offer a variety of services, everything from remittance to FX swaps and so on. So Ratio will be integrated on the back end there, which will basically, allow Ratio access to like potentially like, millions, if not like, tens of millions, hundreds of millions of volumes that are generated by Line users. So that's one. In terms of stablecoins, we will be launching with, obviously, we have USDT, thanks to our partnership with Tether, but also JPYC, which is a JPY stablecoin, IDRP, and IDRX, which are the two kind of like main Indonesian rupiah stablecoins. We will also be launching MYRC, which is a Malaysian ringgit stablecoin, very soon as well. And also, we are having discussions with Hong Kong dollar stablecoin issuers, Thai baht stablecoin issuers. Had a really great conversation during Money 2020. Can't name who, but so I
Exciting.
think towards the end of the year, uh, Indonesia, Malaysia, Hong Kong, US, and potentially Thai baht as well. Some of the candidate stablecoins that we'll be looking to integrate into Ratio.
That's fabulous. If there are any issuers out there or any other parties that want to get in touch, where should they go? Yeah, they can find you on LinkedIn, I believe.
Yeah.
You're on Twitter as well.
Yep.
Um,
So myself, John Cho. You can find me on LinkedIn. You can find me on Twitter. If you search John Cho, I'll probably be, in most cases, the second or third in the search results. But more
just look
importantly, sorry.
Just add ratio, John Cho
Oh, just add
ratio.
yeah, exactly. Yeah, just add ratio. Or more importantly and more simply, just go to ratiofx.com where you will find our contact details and information around the product itself.
Amazing. This is why I wanted to have you on the show. People talk a lot about like, oh, there's a lot going on in stable coins and it's so exciting. And okay, but why is it exciting? And I think you did a great job at that event during Money 2020 to really illustrate it for me and bring it to life. And I think we managed to translate that onto the show. Um, so yeah, I want to thank you for coming on and sharing that with us.
No, it was my pleasure. Again, thank you very much for having me. Really enjoyed my conversation. Would love to be back to even talk about other things that's happening in the industry. But Stefano, I mean, had great conversations at Money 2020. Really enjoyed our conversation today as well.
John, thank you.
Thank you.
To our audience, we hope you enjoyed it as well. This was Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving in markets. See you on the next Market Cap.
If you enjoyed this episode, you can find more of our research in the following ways. For in-depth reports, many publicly accessible, join our research platform. For protocol and market summaries and highlights, subscribe to our newsletter. And for our next episode, follow us on X and YouTube. All links in our bio.